Very good morning to you all, friends. It is indeed a pleasure to welcome you all on this 161st program of AASP for this council year. And this is likely to be the last webinar of AASP for this council year, the term of this council year, not the council. This is a particular year in the 25th council, will be over on 11th of February. And friends, I'm Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board and the Chairman of Public Relation Committee and Vice Chairman of Sustainability Reporting Standard Board. Friend, 2 years ago, when me and Vishal Bhai started our endeavor in this AASP, one of the major focus was learning. Learning on the auditing standard, which tend to be dry and, people take less interest in that. But thanks to the joint efforts and with excellent support from Anil Lalji in particular, in the first year also, we organized more than 100 programs. And this year, so it is 161st program. And more than 130,000 members have attended these programs. Half of these programs have been on a physical mode and half of them have been on a virtual mode. That is why this number is about 130,000. If all would have been on virtual mode, this number would have crossed 2 lakhs. It's a milestone, 161 programs covering all possible topics. Whatever topics we could think of, we have covered all those topics. And this year has been, I mean, it gives me great sense of, satisfaction that we have been able to bring out. We've been able to issue the checklist on auditing standard as well as the working paper formats, working paper templates. And Vishal Bhai, as a convener of the Center for Audit Quality, has also issued some excellent, tools for our members who are carrying out the audits. And friends, every year now from last 2 years, we are running two expert panels, one on bank audit and one on statutory audit. Last year we started, this year we continued. So we've been able to really, take the next leap. Of course, this year we issued 7 standards belonging to the ISQM family. And I had a short meeting with the QRB in the 75th meeting. We congratulated them. And I was talking to the chairperson QRB. And this happened only 4 or 5 days ago. And she mentioned that if we can have more awareness program on QRB finding. So immediately we scheduled this program on the QRB finding. We're also working on a detailed guidance on the QRB finding. So AASB, is breaking the shackles. Besides taking up the technical endeavors, is going very strong amongst the member and educating the members on audit. And friends, today we have a very, very esteemed panel. Our two esteemed panel speakers, Anil Sharma ji and Anil Gupta ji. Let me tell you, though they don't need any introduction, however, both are stalwarts of our profession. Anil Sharma ji has been a member of NFRA, and Anil Gupta ji has been a government nominee in the Central Council of the Company Secretary Institute. And both speak on very diverse topics. They speak on audit, they speak on accounting, they speak on company law. Recently, I've seen that Anil Gupta ji receiving an invitation to speak on Prabhu Shri Ram. So that is the diversity of our speakers. And both are, of course, very, very respectable executive board member of BVSS also, Bharatiya Vitt Salakar Samiti. And this panel will be moderated by our four very young members. C. Manish Bansalji, who has been the chairman of the Batinda branch, based out of Mandi Dabwali, who is also a co-opted member of our direct tax committee. And Mohit Gupta, another very young member of our profession. Ruchi is a special invitee in the Sustainability Reporting Standard Board. He has extensive experience in industry, working in a shared service environment. She also runs Radio Dwarka. So it's a very different endeavor that she has taken up. And Shalini has extensive experience in working in the Kotak Mahindra Bank. So we have put together a panel of 4 moderators who will be, putting the questions which you people want to ask from our guest speaker. So now I would like to once again thank all these speakers, the moderators, my vice chairman in particular, Anil Lalji, and above all the esteemed participants who gave us the encouragement by participating in large numbers. Obviously, the participants would not have been there. Doing these many programs would have been of no use. So, with my sincere appreciation to all of you, and with this, I would like to invite my very esteemed council colleague and vice chairman of this board, and I also call him boss because he's the chairman of Board of Studies, and the abbreviation of Board of Studies is BOS. So I invite Vishal Bhai for his opening address. Thank you.
Thank you very much, Chairman Sir, and a very good morning to you and to our esteemed panelists, Anil Sharma ji and Anil Gupta ji, as well as our moderators, Manish Bansal ji, Mohit Gupta ji, Ruchi Maheshwari ji, Shalini Gupta ji, and our team at the AASB here with Anil Lalji and Vikas. So, well, 161st program, Chairman Sir, I think we would never have visualized that we would be able to achieve this summit in 2 years' time. And I still remember, sir,
this is 1 year. Vishal Bhai, this is 1 year. 161 program in 1 year.
No, I'm saying over a period of 2 years, ever since we took the leadership role at the AASB. And sir, I still remember the first day when we had met at Jaipur at the Vadodara branch RRC, where you had come and we were discussing and laying a roadmap for the board that what it should be. And I think at that time our mantra was that the standards is something जो typically बोलते हैं घर घर पहुंचाना है. I think that is what was our mantra which we started with, and I am very happy that with the support of Anil Lalji, we have been able to achieve this. And sir, I would like to add one more thing, is that especially the webinars, where there is no CPE, the structured CPE that is eligible for members, and even there is a cap on the unstructured CPE, the maximum number of hours. In spite of that, in each of the webinar, we have got thousands of participants. I would say there would be not a single webinar where the participation would have been less than 1,000, which shows the that our I would say the intent, and also the I would say the open arms welcome that members have given to this initiative of the AASB. And to add to it, sir, under your leadership, Sanjeev bhai, the diverse topics, it's not just about the standards per se that you have guided us to cover, but it's also with respect to industry specific audits, transaction specific audits, and like we have today on the QRB findings. So it's a 360-degree that we are trying to cover through these learning initiatives, I would say, at the AASB. And so you mentioned about the CAQ. I think it is again your guidance that that the AASB and the CAQ are working hand in hand to ensure that we are able to give the desired tools as well as the utilities to the members with respect to the audit templates and the working paper templates and the standards and the checklists and all that the AASB releases regularly. And sir, I would say that for the members also who are participating, that AASB is not just about the auditing standards. It is much more than that, I would say. It's about implementation. And Chairman sir, with your permission, I would like to make one statement over here that many times members feel that applying the auditing standards is a burden. On the contrary, sir, I would like to say that applying the auditing standards is actually a relief. It actually saves the members from a lot of difficulties with respect if the proper the standards are applied as they are intended to be applied. So I would at this juncture request all our participants to please ensure compliance with the auditing standards should be the first and foremost thing. And as Chairman sir, you have mentioned, you have given us again a mantra that what is not documented is not audited. I think this is one thing that all of us, once when we reach the office, बहुत जन वो पूजा करते हैं भगवान की when they step into the office. I think every day या तो कोई भजन गाता है, कोई national anthem गाता है. I've seen such CA offices also. I think this is one thing which every morning everybody should announce loudly, that what is not documented is not done, and then they should start the work. I think the application of the standards would then be much more. So with this, once again, my thanks to the chairman, to the panelists, the moderators, and to all the participants who have supported our initiative of bringing the learning of the auditing standards and the related material to the next level, and definitely Anil Lalji and the office of the AASB for executing our thoughts, our desire, our dream to perfection. Thank you very much. I would now request Manish Bansalji. I would invite Manishji to kindly take this session forward.
Thank you, sir. It has been a word of wisdom and coming from the person who had been having affairs and in this evolving arena. Well, respected Chairman, Assurance Accounting Standard Board, CA Dr. Sanjeev Singhal ji, respected Vice Chairman, CA Vishal Doshi ji, respected Anil Dalji, my fellow coordinator, CA Mohit Gupta ji, CA Ruchi Maheshwari ji, CA Shalini Gupta ji, and the galaxy of the fellow members who have joined through various separate platforms in this CPA program. Very warm welcome to all of you in this 161st CPA program of AASB. And this is a matter of pride that under the chairmanship and able guidance of Dr. C.S. Singhal-ji, the AASB has covered all the standards in this one council, which shows the hard work by the AASB board and the team. And these deliberations encompass various sector-specific requirements, and covered all the knowledge required to keep updated on these accounting standards and auditing standards. Members, the CP program today is to enlighten the QRB findings, which has been published by the QRB board while conducting the review for 22-23. And dear friends, it has been really eye-opener. So what the institute is doing, it is a further eye-opener, and the session will be deliberated by Anil Sharma ji. Dear friends, since the profession is evolving, when expectations are all-time high, as well as when the widening of economy, the responsibility of the auditor has been all-time high. I hope this QRB report is an eye-opener, and so will be today's deliberation, detail them in understandings and comments. With these words, I invite my fellow coordinator Mohit Gupta ji for further conducting of this programs with the introduction of our members. Thank you, sir.
Thanks a lot, Manish Bansalji. So first of all, I would like to welcome all the participants. So I think most important participation is by our participants only. And I would like to thank our AASB, Sanjeev Singhal and Vishal Doshi for organizing such a wonderful session. Because as Sanjeev sir said, so AASB has truly done wonders in last 1 or 2 years, especially by organizing so much programs and seeing so much participation by all the professionals. And I would like to thank my fellow moderators, Manish ji, Ruchi ji, and Shalini ji. So, dear friends, today we have two very eminent personalities with us. So, like Sanjeev sir said, although both Anil Sharma ji and Anil Gupta ji, they both are stalwarts of our profession and need no introduction. But still, as a part of program, we have to introduce. So, I will introduce Anil Sharma ji. So Anil Sharma ji has been a chartered accountant with more than 40 years of experience, and he has been an adjunct faculty with Indian Institute of Company Affairs. He has been a past member of National Financial Reporting Authority. He has been a past director of UCO Bank, and he's been actively associated with various NGOs which are working in social sector. So we have such a eminent personality here with us. So with these words, I would like to hand over the baton to Ruchi Maheshwari ji.
Thanks, Mohit. And I think I don't to repeat myself in terms of saying that it's really it's a great topic today, and we're all looking forward. But quickly, I'll do an introduction for the other speaker, the eminent speaker that we have, which is CA Anil Gupta ji. CA Anil Gupta ji, as mentioned with his partner Anil Sharma ji, is also an a learned professional, and he has around 40 years experience. He is IFRS and DISA qualified. He is a central government nominee in the Central Council of the Institute of Company Secretary. He has made various contributions to the nation. He has also actually delivered more than 300 lectures for the institute, and he has been conferred and honored as a faculty by the institute at various seminars. He's talked on various topics, whether it's been Companies Act, tax appeals, transfer pricing, stress management, and quite recently, as you all heard, he's even talked about Ram Bhumi and Ram Janma Bhumi, and which is very nice. It shows the extensive experience our speakers and our professionals really have. So I'm not going to stop. I can keep going in terms of talking about the experiences our speakers have, but I would not like to kind of come in between the session. So I think I will ask our learned speakers to kind of go ahead with their session, and we look forward to all of it. Just to note that any questions that the participants have can please put it in the chat box. And as moderators, we will take those questions and have all of them answered with our speakers at the end of the session. Over to you, sirs.
Thank you, Ruchi. Thank you. Ji, Anil Sharma ji.
Yeah. Very good morning to all of you. And at the outset, my sincere thanks to AASB for giving me this opportunity, and especially making an arrangement where I can share with my dear friend CA Anil Gupta ji on this important topic of report by QRB. We would be definitely taking forward the findings of the report, and we'll discuss this, and I would be expecting a lot of questions. So definitely we would be sparing I would say at least 20-30 minutes for Q&A, so that see whatever we are discussing, that is also absorbed by the participants. That is the main idea. So Anilji, you would like to add something? Then otherwise we'll start with the presentation.
Not adding anything, but yes, definitely. I will like to convey my thanks to Sanjeev Singhal ji and Vishal Doshi ji, and my special thanks to Anil D. Lal ji. And of course, to all the four moderators, CA Mohit Gupta, CA Manish Bansal, CA Ruchi Meshwari, and CA Shalini Gupta. I am also placing my thanks to Anil Sharma ji, my senior, and we have learned a lot from him. With respect to the topic that has been referred to again and again regarding Prabhu Ram, so I got the opportunity to speak on the governing policies of the Ram Rajya.
Wow.
So, very frankly speaking, when I was just studying and researching this topic, I could equate the governance principles that have been laid by OECD in the Ramayana, in Valmiki Ramayana, in Ayodhya Kand. There is chapter number 100. In chapter number 100, Prabhu Ram has asked 73 questions from Bharat. So I will request all of you to read those 73 questions and what the policies have been laid in those 73 questions with respect to the foreign policy, with respect to the economic policy, with respect to the defense policy, with respect to the duties of the ministers, with respect to the duties of the citizens. So just a passing reference. And Anilji, I will like to convey my congrats to both the chairman and the vice chairman. They have given very two interesting principles. One is when he said, not documented is not audited. Perhaps that is the crux of today's report also. And applying of AS is a relief. If you remember, Anil Sharma ji, when we used to speak 20 years back, when very few people were discussing the auditing standards, at that time, maybe it used to be burden, but now, yes, of course, it's a relief. So thanks to all. And now I will request Anil Sharma ji to start with the presentation.
Yeah, And I request you to interject as and when where you feel you want to add or you want to take up
Sure,
the matter
sure.
further. So at the very outset, would like to acknowledge that the presentation which we have prepared today is based on the report which has been prepared by Quality Review Board, and it was published by them in October 2023. In fact, we express our gratitude to QRB and acknowledge that the presentation is based on their findings made by it. And this presentation is purely for academic purposes. And of course, is being presented in a webinar organized by AASB of ICAI. So this acknowledgement was important because the QRB is in fact the proprietary material of the institution QRB. So we thought let's first acknowledge that we are using their report for this particular presentation. Okay, to start with, let's have a quick introduction of Quality Review Board first, and then we will also discuss about little bit about the background of this the work which QRB is doing, and finally the background of the report, and then we will discuss the content of the report. That is going to be our agenda for today's presentation. So QRB is basically established by Government of India under Section 28A of the Chartered Accountant Act 1949, which this section gives powers to the government to set up a body which will review the quality of audit service by audit firms. So with these powers, QRB has set up certain procedures for quality review of audit service of audit firms, and they also appoint technical reviewers, and with their assistance they carry out this quality review of various audit firms. And the main focus of their review is to verify compliance with the relevant laws and regulations, technical standards and ethical standards by the audit firms while when they are conducting the audits. And of course, the very important aspect is also, and that would be apparent when we are going to discuss in detail the report, how the quality control environment is there within the audit firms. Of course, specific observations based on various assignments are there, but primarily they also review the overall quality control environment prevailing in the audit firms, and what they have done to improve upon that. So that is the background of QRB. So there would be one question in your mind that there is another institution called National Financial Reporting Authority, and then we have QRB. What is how these two are bifurcating, and first of all, both these institutions are carrying out review of members. So as you know that NFRA is set up by the Government of India under the Companies Act under Section 132 to not only to set up to frame auditing and accounting standards, but also to maintain quality, to ensure quality services provided by the auditors of the company. So to see that both these organizations do not overlap each other, it has been decided by QRB that they would be reviewing only those members in respect of entities which are being reviewed by NFRA. So as per NFRA Rule 2018, if you look at Rule 3, Sub-Rule 1, they have listed down what are those entities which are reviewed by NFRA. So first is listed companies in India or outside India. Unlisted public companies having paid up capital of not less than rupees 500 crores or having annual turnover of not less than rupees 1,000 crore or having in aggregate outstanding loans, debentures and deposits not less than rupees 500 crores, which is looked at the 31st March of the immediately preceding financial year. Then insurance companies, banking companies, companies engaged in general or supply of generation or supply of electricity, or all companies which are governed by special acts, they are also covered. Then any body, corporate or company which has been for which a reference has been made by the central government to the authority in public interest. And not only the companies which are in India, if there is a body corporate, incorporate or registered outside India, which is a subsidiary or associate of a company incorporated in India. And the condition is that if income or net worth of such subsidiary or associate company exceeds 20% of the consolidated income or net worth of such company or body corporate, then this overseas body corporate can also be reviewed by NAFRA. So this is Rule 3.1. So all entities or all companies or all entities which do not fall within this framework, which is given in Rule 3.1, then falls into QRB's preview. So this is the distinction.
No, yes, you have very well explained the difference between the role of the two bodies. And NAFRA, as you just explained, deals with all these entities which have been listed in Rule 3.1. But we need to appreciate that the role of the QRB is equally important as that of NAFRA. Because QRB, this report, it is going to very well lay the principles which the audit firms have to follow. So I do agree with you that this difference we need to appreciate. But many times a question comes, what NAFRA does. So you have very well explained it with the help of the Rule 3.1 and the rule which deals with the Quality Review Board. So it's good. I think we can move ahead with what this report deals with.
Sure. So now there may be a question in your mind that what happens if a particular entity is reviewed by QRB. So first of all, if you look at the work which QRB has done since 2012-13 to financial year 22-23, which is almost 10 years, then QRB has completed 623 reviews. That is the scope which they have done. And if you, action after these reviews has been taken, there are three types of action which they take. First, they give, if there's any non-compliance which are found relevant of any laws and regulations or of any technical standards. And if this non-compliance is of such a nature that it materially affects the true and fair view of the financial statement, then these cases are forwarded to Disciplinary Directorate of Institute of Chartered Accountants of India for further examination. That is the first step which they take. And second, where they feel that, okay, the non-compliance is not material, is not materially affecting the true and fair, but requires improvement with regard to compliance of laws and regulations, reporting on and compliance of various technical standards, which are not in material in nature, then it issues some advisory or guidance to the concerned audit firm under review, or AFUR audit firm under review, for taking remedial steps for improvement in quality of service in future. But it is not, they are not left there itself. They then followed by another review within a specified period, which is specified on case-to-case basis. So with this background, and then rest, they also give some general clearance, which is called the generally accepted. So they don't say these are the good one. They say these are generally acceptable compliances has been done by audit firms under review. So looking into this data, if you look at out of this 623, 6% of cases, which is 36 cases, they have referred to disciplinary directorate. Another 62% cases, which is 386 cases, they have referred the matter they have issued advisories. And rest, which remains the 32%, which is almost 201 cases, where they have said that these are generally acceptable. So this is the background and what actions are taken by QRB. And what is the, one, as I mentioned to you, one is the where they refer the matter to disciplinary director, and then it goes further. Disciplinary directorate takes care of that. Even issuing advisory has taken quite a significant importance now, because the office of CAG has now decided that when you are getting yourself listed with them for government work and all that. So there they have mentioned that wherever advisories has been issued, they would be deducting certain marks for the score of firms to whom advisory has been issued by QRB. So from that point of view, even advisory has become now quite an important, and we have to be very careful that even advisories, so we have to do our work in such a way that even QRB doesn't have chance to even issue advisories in our case. Otherwise, this is going to definitely will have an impact on our score of firms when government audits are being allotted by CAG.
That's good, Anilji. Can I add something?
Please, sir, go ahead.
Okay, thank you. Very well explained and very well analyzed. The initial words which were used, that analysis applying this AS is a relief. So this data which just Anil Sharma ji discussed with all of us, that 94% of the private limited companies which have been reviewed, 386 only have been given advisories, and 201 cases have been closed where it was found that they are following the auditing standards as per the requirement of the institute. And not merely that, we need to appreciate that the following of the auditing standards improve the quality of the audit. Secondly, it helps the stakeholders also, because unless and until the stakeholders get the right information in the right manner, then the purpose of the audit doesn't serve the requirement which is needed from an audit. So this particular report, and thirdly, I think only there were 64.
Coming to that next.
Okay, you're coming to it. Fine. So you can go ahead with that. Then we will discuss which were the auditing standards and what was the percentage of the auditing standards where there was more lapses as compared to the overall auditing standards. We will come to it. You can first go ahead with the audit firms also, the number of audit firms.
Okay.
Here in this.
Okay. So now coming straight to the QRB report, the very specific report which we are going to discuss, which is the report QRB report on audit quality review 22-23. So this report is very interesting. Generally, QRB publishes periodical reports on annual basis. Every year they do it. And they give their findings in the aggregated manner to provide guidance to the audit firms so that they can improve their quality in their quality of their services. This report is very unique and very interesting to all the, I would say, majority of the members who are auditing very large number of private limited companies. So this particular report is purely with regard to private limited companies. And this report highlights the key findings observed in the audit quality review conducted by QRB in respect of audit private limited companies up to 31/3/2023. And the sample size of this report is, of course, they have done, as I mentioned to you, they have done a lot of, around 623 reviews they have done. But this report is based on a sample size of 64 private limited companies. And these 64 private limited companies are operating, they have been selected from various industry segments. 17 industry segments has been represented in this 64 private limited companies. And almost like 57 audit firms are involved into this. So this is the, and another very important aspect is that this report covers 29 reports which are relating to financial year 2017-18, 31 reports relating to financial year 2018-19, and 4 reports relating to financial year 2021. So this is the the structure of this. And another very important point here you would appreciate is that there are, as I mentioned, there are 57 audit firms. So if you look at the structure of these audit firms also, 18 firms are there where there are more than 20 partners, 8 firms where there are 10 to 20 partners, between 10 to 20, and 31 audit firms where there are less than 10 audit partners are there. So it's a very, I would say, the very vast spectrum of audit firms, and very, I would say, ideal sample size, where some trading companies, some diamond and jewelry companies, automobile, FMCG, IT companies, health and financial sector company also has been included in 64 private limited companies. Anilji, would you like to add?
It's okay, I think, because let's move to the technical part of it.
Yeah, okay. So this is the basis of, or I would say the background of this report. And QRB has, if you look at the structure of this report, they have dealt with each and every standard with regard to the non-compliances. And they have also given examples, what type of mistakes, what type of deficiencies they noticed in their report. So before we go to the report, I would just like to give you a summary of the observations. Anilji, would you like to give that summary?
No, you can, please go ahead.
Oh, okay. So we are going to discuss on standard wise, each standard wise, what type of nature of deficiencies were noticed. But before that, just a summary, which I just noticed is very interesting, that out of 64, in the 64 companies which they have reviewed, 30%, in 30% companies, they found non-compliance of SQC1, Standard on Quality Control, which is our section 3, Standards on Quality Controls. So, which is SQC1 is there. 30% cases they found observations there. Similarly, another very important standard, which is SA230, audit documentation. 16% cases they found deficiency in documentation. As our Vice Chairman AASB has just mentioned that if documentation is not done, then audit is not done. If documentation is not proper, then audit is not done. So that further proves this point, that in very large number of companies, 16% SA230 non-compliances was noticed by them. Similarly, on SA 505, which deals with the external confirmation. So there also almost 14% cases deficiencies were found. And then reporting and planning, and there's so many SA 300, SA 700, some more deficiencies. Sampling is another SA 530, where 11% deficiencies were found. And one more SA I would like to mention is SA 580, where we are talking about written confirmations. So there again, 11% of companies deficiencies were found. So this is the summary of various percentages of observation of various essays, which has been noticed by QRB and has highlighted in their report on audit quality review. Yeah. Anilji, would you like to add something?
Just 2 lines. That with respect to the lapses in the Schedule 3. So they have mentioned that more than 48% cases were found there where some or the other requirement of the Schedule 3 was missing, or it was improper. And with respect to CARO 2016, because they have done the analysis on the previous CARO report, so 19% of the cases where the CARO was not properly reported. So that gives us a glance of the type of lapses that have been found during this review. So I think when we move with the technical part of it, we will definitely come to know what type of lapses they have found. And that will help us in improving the quality of our audit firm, as well as the quality of our audit staff. And it will help us a lot once we go ahead with the other slides. I think, Anilji, we can move ahead.
Yeah. So, and Anilji, just one important point I would like to mention, that in our presentation today, we though this report contains, as you rightly mentioned, contains non-compliances observations on essays, on accounting standards, both AS as well as Ind AS, and on other regulatory requirement, which is CARO, you have just rightly mentioned. But today's presentation, we have just included only the
essay part of it.
Essay part of it.
Right.
So if you want to look at other areas like standards, accounting standards, so I would request you to refer to that particular report, and that will give you an entire picture of that also. So with this background, let's move to the specific standards on auditing, where some observations are. So as you know that if you look at our compendium of standards on auditing, in section 3 we have section 3 deals with standards on quality control, and we have one standard there, SQC1, quality control for firms that perform audits and reviews of historical financial information and other assurances and related services engagement. The name is quite a lengthy one. There, it is, I would say, this is one essay which is more concerned with the quality consciousness of the auditee, of the audit firm. And as you can visualize that each audit, of course, has a very specific requirement that you have to follow this. But if the environment within the firm as a whole is, if the firm is quality conscious and they comply with various requirements of SQC1, the specific audit assignments are going to happen in a proper manner only. If the environment is not there, there are definitely other issues, other essays are definitely going to be flouted in some way or the other. So this, from that point of view, SQC1 is very important. And this is again apparent from this report also, where they have devoted very large part pointing out, non-compliances on SQC1. SQC1 is a very lengthy standard. So first part of this standard deals with establishing appropriate system of quality control. So again, the report has given a lot of observations there, but I have pointed out only two important ones of them. It says they have found that the firm has not established an appropriate system of quality control designed to provide reasonable assurance that the firm and its personnel shall comply with technical standards, ethical standards, regulatory and legal provisions. So the very first point, and Anilji, one more I would say suggestion would be to all the participants would be that whatever observations are there, these are very good indication that we should in our own firms should have properly address these issues so that we improve the quality in our firms also.
Just to add to it, Anilji, I
Yeah.
think it's very well appreciated. And as you said, it's a very long name, but many informations are there, or many requirements are there in the name itself. First of all, the name is dealing with the historical financial informations. So the documentation which we are discussing again and again, I think that words we are being repeated. So that deals with the historical financial information, because history comes out of the document itself. So secondly, just to add to it, that we are not merely to confine to the audit services. We have to provide these particular SQC1 and our policies with respect to the assurance services, as well as to the other related services engagements also. Many a times what happens when we issue some certificate, or we have to say audit or sign a provisional balance sheet, then we have to take care of the audit documentation there also. And I appreciate what you said, that policies of there, we have to prepare a manual of our audit firm, that these are the basic necessities which every audit partner or the audit team members have to take care of. I think that will help in implementing this SQC1 in a more effective manner.
Yes, that's right. So the observations are that in some of the firms, they didn't have established an appropriate system of quality control. And in some firms, they have noticed that though they have informal system of quality control, it has not been documented. So these two things are important. So we must have an appropriate system of quality control designed to provide reasonable assurance that the firm and its personnel comply with the standards, and also to document it. So this documentation means that this policies and procedures should be available with the addressing to the various elements which has been mentioned in SQC1. So these two parts are the two important points, are the observations are there. So now let's come to the second part of it. So if you look at from para 18, para 28, para 31, or even I think even para 23, these are 4 or 5 paras in SQC1 which deals with the ethical requirements. So there are observations which QRB has made. If you look at that, says not establishing policies and procedures for acceptance and continuing of client relationship and specific engagements. See, this is this ethical requirements not only coming from SQC1, but we also have our code of ethics. So you can build in that while preparing or establishing a policy and procedures, how a new client will be engaged with regard to looking into the ethical side of it, and how you are going to continue with that with your existing client if any further development has happened. That is one part. Second is not considering whether the firm personnel have experience with regulatory on reporting requirement on specific nature of assurance assignment. So this is again a very important point, we have seen that, in fact, QRB has pointed out that in number of cases, as SQC was 30%, as I mentioned, observations were there. So they have seen that the audit firm was not having specific nature of assurance, experience, the firm as well as the personnel of that firm, they were not having experience of regulatory and reporting requirement of specific nature, and still they carried out those assignments. And this is another. So this has to be documented, that if you are carrying out a specific audit, for example, let's take a case of so you are, let's say, auditing a share broking firm. So do you have, or your staff has sufficient knowledge of all the SEBI regulations, all the Security Contract Regulation Act, all those has to be there. Only then we should be accepting that kind of assignment. That is the point which this QRB has pointed out. Not conveying independence policy of the firm to the staff. So independence policy, again, this is a part of the SQC, that each firm must have a independence policy. So not only having a independence policy, but also conveying it that to its staff is also important. And then the compliance of this policy is taking at least on annual basis a written confirmation from each one member of the firm that they comply with this independence policy of the firm, and only then they would be assigned any assignment where after taking care of this aspect of ethical requirement.
I think, Anilji, I have 2-3 suggestions in it.
Please.
This particular second point with respect to experience.
Yeah.
So what I feel is, it's not that if you are not having an experience, you should not take that assignment. If you find that you can give the training, or if you find that you can gather that experience or knowledge during the course of audit, even then it can help you in carrying that assignment. But yes, of course, you have to document it, that how you will be able to provide the necessary knowledge needed for that particular audit. As you gave an example of share broker. So many a times that some new streams and fields come in the market or in the industry. So we may not be having a specific knowledge at that particular time, but yes, we can go for the quick courses or reading through the material. So that can be taken care of, and that can help us in enriching the experience and the knowledge of our staff. Secondly, with respect to independence policies, I think many a times the staff is related to the client. So once the staff is related to the client, that particular aspect has also to be taken care of. That undertaking must be taken from the staff also under this independence policies. What's your take on these two issues that I have just raised?
Yeah, that's very correctly. In fact, the next slide, which again addressing to one part of SQC, one is on human resource. So
Right.
There, the point which you have just mentioned about the knowledge or experience, that is taken care of there in a more detailed manner. We will discuss that. And second is that this is very important, because I remember, I can share very recently one case happened. A staff went for an audit. So later on, I came to know that his father's firm is actually has a business relationship with that auditing firm. Auditing company. So I was I asked him why you didn't declare it, so that you are already there. So we removed him. I said, yeah, okay, you don't go there, because otherwise sometime you have a biased some approach.
Of course.
So from you are. So that's why this SQC requires that first of all, independent policy has to be conveyed to them, that this firm has a policy, and whatever, whether it is by soft copy or something, should go to them. And on annual basis, a written confirmation should be obtained from them that first of all, they have understood this policy, and based on that, they would give a declaration that I am interested in such and such, or as and when they are assigned a particular audit or any assurance services. So they would then and there, they would make a declaration that due to this independence policy, I declare that I am not I cannot participate because of these reasons. So this type of approach should be there in the firms.
Anilji, you're absolutely right, because it helps a lot if supposing later on the staff of the auditee, if they just mentions once that there was a related person, then the whole of the audit gets questionable. So this is very important point that you have raised. I appreciate it. Good. Let's move it.
Coming to the next point, which is relating to human resource. We are still on to SQC1. So what QRB has noticed, that they have said that in number of cases, the audit firm has not designed, they have not established policy and procedures which are designed to provide assurance that firms' personnel are equipped with capabilities and competence necessary to perform its engagement with professional standards and regulatory and legal requirement. Now, this is something very different. And now, once again, I'm coming back to one is the on the firm level, and the second is onto the specific assignment level. Now, you are let's say you are sending a team to audit a telecom discom company. So while selecting the team, you have to be very careful that there should be at least someone who has this experiences, who know this business, how this business is run, what are the intricacies of this business. It's not just any business has its own complexities, its own intricacies. So there should be at least one person or one or more than one person, depending on the size of that audit assignment, that you should be having a policy that suppose you will say, I'm just giving you an example, a firm which has got 1,000 crores turnover in this segment, there we would be sending at least 3 persons with requisite qualification. This type of policy and procedure has to be there in our policies and procedures which we set up for SQC. Similarly, dealing with consultation, as you rightly pointed out, that especially in small firms, you cannot have all the time experts in all the fields. So there, what you have to do is you have to keep a window open where you have consent with some of the experts in those domain, and there should be a system in your firm that any complexities, any important points relating to that particular industry or segment will be discussed will have a consultation by the audit firm with those senior persons who have in-depth knowledge of that particular domain. So dealing with consultation, she refers to that, and then not dealing with the resolving. And the next 2 points are very important. And in these 2 points, what SQC has found that when a audit team went, there were difference of opinion between the team itself, and how those differences were resolved, how you are going to deal with that. The firm did not have any policy or procedure dealing with that. So, for example, let's take a case on GST issue. One team member said, no, it is applicable. Another said it is not applicable. So what happens after that? that difference is going to be resolved. That is the point. There should be some policy or some procedure addressing to that issue. Similarly, on the same grounds or on the similar lines, if there is some complaints or allegation
Yes.
between the team member itself, how that is going to be settled, and what is the policy and procedures to address these complaints and allegations, there should be some policy and procedure dealing with that. These
I
are
agree with you.
these
Yes,
are
we
the
need to-
points which has been
Yes,
highlighted.
we need to have the resolution policy,
Yes.
because that will help the audit staff itself.
Yes, absolutely.
They will be having well laid down rules that this is how you have to handle it, and that brings the transparency in the audit also, with respect to the auditee and with respect to the audit team as such. And secondly, when the reports are reviewed, you see, we are torch bearers of the audit profession. So if we are having these policies, that gives confidence and reposes confidence in the stakeholders and the government agencies. So I think SQC1 has been very well covered, so we can move ahead also.
Okay. Now, another point on SQC1 is with regard to review and monitoring. See, as SQC1 requires that every stage there should be a process should be there for reviewing and also to monitor the progress of the audit which is going on. So they have found that in number of cases, policies and procedures requiring an engagement quality control review has not been there. They have not, some cases it was not there. In some cases, they have not found the criteria based on which such evaluation will be made. That is another important point. And another is not establishing policy and procedure addressing the appointment of engagement quality control reviewers and their eligibility. Who can do this? Who will do it? And who can do this? So these are the points which there should be a policy. Okay, if this audit is there, then another partner who is, let's say, having experience of 10 years or 20 years, then he would review it. Or eligibility criteria can, since he has already done an audit of this, so he is eligible to do this because he has already reviewed it. He has already done that type of audit. So these are again small points and important points rather. I would dare not say small points, which address to the issue of review and monitoring, which should be properly taken care of in policies and procedures which are established by the audit firm for their audit services. And this is actually a wholesome environment in the firm itself. We are not here. SQC1 is not primarily talking about just a particular audit. It is giving as I mentioned in the beginning itself, it is an indicator of what is the quality consciousness, quality control consciousness of the firm itself. So is there any policy to review? Is there any policy to monitor? Who is going to monitor? What are his qualifications? Or anybody can monitor? All these points are there on this SQC.
Anilji, but just I want to add a point here.
Yeah,
that
please.
I was sitting with some proprietorship concerns where there was only one chartered accountant, and it was a small firm. So 3-4 proprietors were sitting. So we were discussing this point. So they raised a very valid point that in our firm, we are not having any other partner. So who can review it? So one of the proprietor, he gave a very interesting example, what policy he is following in his company. So he said that our audit team, we form a senior article and junior article. So whenever the audit has been done by some junior article, we get it rechecked by senior article, and then proprietor reviews it. So they have laid a process. So perhaps what I feel is that SQC1 is not saying that there has to be a senior person every time, but whether the process is there or not, and even the small concerns can carry this process. And secondly, it helps them in enhancing the value of the audit, as well as in bringing quality. And see, when the checking is done, many a times the mistakes are found. And if the checking is not done, then the audit will go with those mistakes itself.
Anilji, I will go one step further. See, in HR, human resource, I just mentioned about the consultation. So proprietors can have consultation on this aspect. See, they
Right.
can engage another senior chartered accountant in practice to review it.
Review it.
But there is absolutely no problem in that. And in fact, that would be more independent than doing it within the firm itself. And that goes very well with the SQC1.
Okay, good.
So coming to the last leg of SQC1, that is onto the documentation. I am sure we have been, whenever we talk about essays, we give a lot of weightage and thrust on this aspect. So there, SQC1 also talks about the documentation and requiring appropriate documentation to establish and provide an evidence of the operation of each element of its system of quality control. Number of times it has been noticed that firms have quality control, but they have not documented it, that what policies are there, how they do it. So first requirement is that there must be these policies and procedures must be documented. For engagement team to complete the assembly of final engagement files on a timely basis after the engagement report has been finalized. This is another very important point. See, our standards give us a very interesting mechanism where once audit is complete, then we within a given timeline, we must ensure that we should review our file and ensure that all the documentations which are required to be there are there or not. Because see, finally, those if that is done at the let's say immediately after audit is completed, then first of all the entire experience is there. So you would not forget that what has been done, how this matter has been dealt with, and to document it is always a good idea, and that would help in subsequent review by the firm itself, by peer reviewer, by QRB, and so many agencies are there who are going to now look at your performance, and that would always be proved by the documentation which is there in your file. So documentation policies on SQC has got very, very important thrust on that. And for retention of engagement documents for a period sufficient to meet the requirement of law and regulation. This is another point. These days we collect a lot of documents. Then there should be a policy, what the retention policy of engagement documents. Up to what period we would be retaining these papers, what type of papers can be retained, how those will be retained. All those are, there has to be a policy because we have space constraint. So should we go for electronic mode and keeping those documentation for and of course there are Companies Act as well as Income Tax Act and so many other laws require that our documentation has to be kept for a defined period. So our policy should be there how on this retention of engagement documentation, keeping in view the requirement of law and regulation.
I have just to add a line in that. As you
Please.
just mentioned the electronic mode. So my suggestion is that soft copies and converting the hard portion to the soft, that can help in saving the space, and of course that can help in searching and finding the papers whenever desired in the future also. So this soft versions there should be a policy with respect to the retention of the documents in the soft version itself.
Right. So let's move quickly because of the
Ah,
paucity of
I
time.
think yes, we need to be.
So now the next set of observations are onto the standards which fall into 200 to 299 category, which is general principles and responsibilities. So let's start with SA 200. So of course the heading is overall objective of the independent auditor and the conduct of an audit in accordance with standard on auditing. So here they have found that not planning and performing the audit with professional skepticism, not exercising professional judgment in planning and performing the audit. These are the observations which QRB has made in those cases. I think we can move further on that. So next is on SA 210, which is agreeing the terms of audit engagement. So engagement letter is such an important document, exercise which we must do. See, there is a term which we always called is expectation gap. And sometime when any audit assignment is done, so we have to be very careful what is expected from us to be done, what we have been asked to do, and the auditee should also know what actually we are doing. So to just have a very clear understanding, the scope of work, the report which we are going to give, the scope of that report, everything has to be clear between the two. So engagement letter from that point of view is important. And of course, the report has also referred Section 144 of the Companies Act, which are certain services which cannot be provided by the auditors of the company. So that should also be kept in mind while you are drawing the engagement letter.
Anything else, or should I add something?
Yeah, but just one more very
Sure.
basic
Please,
point which they have mentioned. This engagement letter was wrongly dated prior to the date of appointment at the AGM. So these are small point, but sometimes these small mistakes are also pointed out by QRB or some other agencies. So we have to be careful on that. Yeah, please, you can add.
I just want to add one point that this particular engagement letter, this gives the powers to the auditor, and whenever we communicate with those charged with the governance, so what will we be needing from them, and how they need to answer our queries, our observations, that we put in the engagement letter. So the management basically agrees to it. When the management signs it, management accepts those conditions of the audit. So later on, whenever the difficult queries are raised or difficult observations or complex observations are raised, the management cannot say no, and this particular engagement letter comes to the rescue of the auditor at that time. Many cases we have found it that if it's mentioned there, then the case becomes easier for the auditor to convey to the management.
Right. Yeah. So moving to the next, quality control for an audit of financial statement. Now, one more point which I just want to mention is that these observations which are on specific, other than SQC1, are on case-to-case basis. I mean, these are mostly they are found in when they were looking into all those financial statements of 64 companies which they have on specific audits. One was with regard to when they see if you look at the exercise what financial reviewers does with the on behalf of QRB. So they have a very detailed information questionnaire where it's like peer review also, where they have to give very detailed information and all the documentation also has to be shared with the reviewer and quality reviewer, and then based on that they make this assessment. And of course then there is a question raised by the reviewer and answers given by the audit firm, and then they draw certain conclusions. So anyhow, in between, they have QRB has found that see, in some cases that the firm has not documented engagement quality control reviewer performed an objective evaluation of the significant judgments made by the engagement team and conclusion reached in formulating the audit report. I'll just try to explain it. Suppose there is a case where certain observations finally came up that, okay, these are the final observations made by the engagement team. And then there are, of course, there's going to be a report. And if so, the reviewer has to really put in place on document, he has to document that how those significant judgments which engagement team has made, suppose they have found certain problems and still they have not reported it, what were those considerations on which they have decided not to qualify the report, and that this decision of that has been reviewed by the reviewer, and how he has satisfied himself that, okay, their decision was final. It has to be documented. This is the point which this SA 220 is placing here. So next is on to the audit documentation. Once again,
just a question in that previous one.
Yeah.
Question was asked that when we ask the outside agencies or outside chartered accountants independent to review the audit, so in that case, need we take any confirmation or any report or any certificate from them, number one? Or if we have mentioned in our audit program and audit plan that the review will be done by such and such outside person, and this is the name, and if that person just give his observations on a simple paper, will it be sufficient? So what's your take on that?
Anilji, see, essay, there is a separate essay also which deals with, we are going to share that also, where we are relying on work of other auditors, expert.
No, that is something else.
Yeah, no. Point which I am trying to say, this is nothing but that only. And finally, I would say reviewer, if reviewer has given certain observation, then it has to be seen why. If it is not done, then further course of action will start, right? So technically conclusion has been drawn, and if, let's say, if outside reviewer has said, no, this should have been concluded this way, then it is the responsibility of the engagement partner to ensure that his observation is properly dealt with.
That I agree.
But it has to be documented.
No, that I agree. That I appreciate. But my question was a little different from here, that if a reviewer has done it and he has found no observation, he has found everything is fine. So the audit firm has to maintain a document that it has been reviewed. So yes, what can be that document? We will prove later on that it was reviewed.
See, you treat this reviewer as part of your
audit team
itself. Then what you do? Then there has to be some policy and procedures. Something should be there in procedure. You must.
You have given some mail to him, or
so that and after that he must be giving some reply that he has reviewed and found it okay. Something should be there, and that should be documented.
Okay,
there in the audit file. So let's
we can move it.
Yeah. So let's move to the next one. Again, audit documentation. Here, QRB has found deficiencies with regard to a lot of issues to understand the nature, timing, extent of audit procedures performed. It was not documented properly. To comply with the relevant requirement of SA and other applicable legal and regulatory requirements. For example, if in your audit file, there is no document which says that you have examined each and every essay. So how you will prove that you have seen it? You have examined it. So that documentation was missing. So a checklist. I mean, if you look at some of these, guidances issued by AASB also, where they have given checklists. So those checklists should be part of your audit papers. That yes, each and every standard has been addressed. Of course, if addressed, then there may be some observation or no observation. That's a different issue. But at least there should be documentation that those were addressed. Similarly, results of audit procedure performed and audit evidence obtained. There was no documentation. Significant matters arising during audit, no documentation was found. Conclusion reached thereon and significant professional judgment made. Number of times, this is very common. In fact, when you look at peer reviewers have also, or I would say that we have another committee called FRRB. There also some of these conclusions was found that the file itself is showing that certain observations are there, but the report, it has no linkage to the report. So how those has been addressed, how that final professional judgment was taken that you would not be qualifying, or you be qualifying in this extent, you are going to qualify, or you are going to give this EOM or whatever emphasis of matter. Sometimes these are some decisions, professional judgment, which has to be reflected and should be confirmed in the through the audit documentation itself. And another very important point which QRB has noticed, not maintaining carry forward working papers. I mean, carry forward means records of matter of continuing significance for future audits. So sometimes, some observations are made which are dealt with in a particular manner, but which may have a impact on future audits. So it is always to maintain some carry forward working papers, so that as and when the new audit for the new term is the next term is taken up, those papers are read or are taken care, are considered while planning or while carrying out the audit. So from that point of view, these carry forward working papers are important, and QRB has found that they have not maintained in some of the cases.
Just a single point I want to add.
Sure.
That another very interesting observation was made by the committee or by the board, that the bifurcation of the paper, the audit evidences that you have collected, and the representation that the management has made. So all these were mixed. So it was very difficult for the reviewer to review the audit file. So we need to, because what happens during the audit, we keep on collecting the papers. So at the end of the audit, I think that's what my suggestion is, that we should segregate the both the documents separately, that these were the evidences that we have obtained during the audit, and these were the representations that were made by the management. So what's your take on that?
Anilji, SQC1, when we were discussing documentation part, then only I mentioned that there's a very specific para there in SQC1. It says that when the engagement team completes its audit assignment, then they have to assemble the final engagement file, where they have to ensure that all these papers are in line. What you have just mentioned, what was the point which was raised, what was the
Yes.
came from them, and how it has been dealt with. So technically, when you are finally assembling your file, you have to weave a thread right from the beginning, from your audit program till the report. How you conducted the audit, what were the observations, how management responded to that, how you have dealt with that, and how it is appearing in the final report.
Absolutely
So
fine.
if that thread is taken care of, then everything falls in line.
Yes, I think that's good, and it's just a gentle reminder to the participants that we need to take care of it.
Yeah. Okay. So coming next to 240, this is with regard to auditor's responsibility relating to fraud in an audit of financial statement. See, as I mean, there's I can say that this is one essay which has become so important these days, especially when we are under scrutiny by so many law enforcing agencies. So this becomes very important, and if you have faced them, they would also be asking the very first question, how you have ensured that what are the steps which you took to ensure that there is no fraud was happening in that. So that is, from that point of view, compliance of SA 240 is very important. So what QRB has pointed out in the report, that they have found cases where not documenting performance of necessary audit procedures, including making inquiries of management or those charged with the governance. So not making inquiries of internal auditor to determine whether they have knowledge of any actual suspected or alleged fraud. Not included the audit procedure relating to presumed risk of management overriding of controls. Not identifying revenue recognition as a presumed fraud risk. So look at these very important points which has been. So if you read it from other side as a guide to us, what we learn from these observations is that whenever you are next preparing your audit program, identify recognition as a presumed fraud risk and work on it. Include the audit procedure relating to presumed risk of management overriding of controls. So you can read it in that way. Not documenting, mean document that. Not making inquiries, make inquiries. So this is like giving you your future audit program, that what you have to do to take care of SA 240. I mean, in this particular case, where you say not making inquiry of internal auditor to determine whether they have knowledge of any actual suspected or alleged fraud. And in fact, when you read the report full, they have also mentioned that the audit firm didn't have even internal audit reports in its record. So from that point of view, these are certain very important elements or areas which address to your responsibility relating to fraud in audit of financial statement and should be taken care of. Anilji, anything to add?
Right, I think we can move ahead because it's already 12 o'clock.
Okay. Yeah, we are still a lot of. So next is consideration of law and regulation in an audit of financial statement, SA 250. And of course, we are now talking about NOCLAR also, which is coming from our Code of Ethics. So what QRB has pointed out in its report, that in number of cases, 250, as I mentioned to you, that around, I think I don't mention, it was around 8%, only 5% were there where this deficiency on SA 250 was noticed. So again, that point is important, that when you are carrying out an audit, as mentioned in this SA 250, that each entity is governed by certain acts and regulations. So in addition to, let's say if it's a company audit, then in addition to Companies Act. So how those compliances under those regulations has been made, that is the responsibility of the audit firm to take care of while carrying out that audit. And not documenting, obtaining a general understanding. First, you must understand, suppose, as I again giving the same example of, let's say, take the case of a banking, let's say cooperative bank. So cooperative bank are governed by specific regulations of the RBI. So first of all, there must be in your file that what are those regulations which has been which governs this particular activity. And second is not obtaining sufficient appropriate audit evidence regarding compliance. So whether those specific regulations which apply to, let's say, cooperative bank, have they been complied with? So there, your audit file should have audit evidence that you have taken care of, you have addressed to those issues, and you have documented and examined and documented that those aspects are those requirement of that particular law and regulations are complied with. Otherwise, then we have a responsibility to report, and so many other things will happen. That's a SA 250 onto that also.
And many times a question is raised with respect to this, that how many laws we need to know and how can we take care of it. So on that, my opinion is that the MRL comes a lot to our help. And in the MRL, we need undertaking from the management that these are the laws which they have taken care of, and that gives us a glimpse of it. And secondly, many times there are technical laws also, so we need not have knowledge of each and every law. But yes, of course, if there are certain transactions, then we need to refer to those laws and how we need not have knowledge of it, but we need to ask the management that how they have taken care of the requirement of a specific law which is applicable to a transaction. Like suppose there is a transaction in the foreign exchange where the FEMA is involved. So what's your opinion on that?
Anilji, if you look at the SA 250, so it has very clearly mentioned, it has given the how to identify what are those laws and regulations which govern the operation of the company itself, right? So first of all, those cannot be ignored. Their MRL will not help. Right? So I mean, for example, if you are, let's say, taking care of a discom, so you know that these are regulated by Electricity Act, then regulation by regulatory authorities. The prices are monitored. Their sale price is determined on a particular manner by a particular authority. So these are, while doing an audit of a discom, you cannot ignore them. So these are primary laws and regulations within those regulatory framework or legal environment that company works. So those are primary and cannot be ignored. And there are then there are certain other laws and regulations which has got an impact on true and fair. Then according to that, you have to see, for example, labor laws. Then MSME Act is there, which we have now. And of course, in some cases, there are specific reporting now is happening, ESI, PF, MSME. All those are important from that point of view, and has to be on case-to-case basis you have to look at. So first of all, looking into the regulatory framework from that point of view, that the main industry in which if it is regulated by specific act, then those has to be dealt with in a different manner, and other laws and regulations has to be dealt with in a different manner. Looking into then the basis becomes the impact on the true and fair view and according. And of course, in some cases where there is a specific requirement to report, you have no choice but to take care of that.
I think from your what I have taken is that we should distinguish between the two, the primary and the secondary. Yeah. So if we take the laws in that manner, then it will help in conducting the audit in a better manner. So good, yes. Good.
Okay. So let's move to the next one: communication with those charged with governance. Now, again, very important one, as you rightly mentioned, that if you are doing an audit, you have an observation, you have not exposed the management that these were my observations, and without getting response from them, you just carry out your audit and make your final report. That is not going to give you a proper reporting. So from that point of view, SA 260 says that you must document that who are the appropriate person to be needed. So that's the first step. Who are those who would be considered as TCWG, those who charge with governance. And then what not documenting आपने उनसे क्या communicate किया, and then how if very large number of times it happens that while doing the audit you communicate to the management orally. A lot of matters are discussed. So what this standard says, as and when matter is discussed orally, then you are supposed to make minutes of that communication and keep that in your audit papers. So from that point of view, this communication with those charged with governance is important. Now coming to the next one again, which I think is the next set, which is the risk assessment and response to assessed risk. This is the next category from 300 to 499. The very first one is planning and audit of financial statement. So this standard requires that there should be an audit plan. While making the audit plan, there should be a how much time it is going to take, what type of resources, the quality of resources, and the number of personnel which will be required to complete the audit. That and how this is the overall and who will go when and how this will be done. This overall audit strategy and audit plan is the requirement of SA 200. So the observations which you can see, they have in some cases they have not developed an audit plan. They have not determined time and resources necessary. They have not even determined the nature, timing, and extent of direction and supervision of engagement team members. So these are all part. How will be done? Who will do it? And what time they will do it? Who is going to supervise them? Who is going to direct them to the engagement team? And all this is part of audit plan. So observations are in front of you that in number of cases these were found missing.
I have an observation in it.
Please.
That when we were discussing the audit engagement letter, in my opinion, audit plan be made at that time, maybe a draft of it, because you see, working out the costing, that's also a major part for any audit firm. And it all depends on the planning, because planning will help the audit firm to understand how much staff will be needed and how much time will it consume to perform that audit. And that will give us a total glimpse of the total cost involved. And then, yes, of course, discussion can be held with the management also. And it will give you a rough idea to the management as well as to the auditor also, the fees that is being resolved by the management. So that discussion can be held. So I think this is very important aspect. And this can be taken care of two times. One at the time of releasing the engagement letter, and second at the time of performing the audit.
Right. So let's move to the next one. This is again very important one, which is the SA 315. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Now, this is like a, this is when you are planning your audit itself, this is you are doing this at that time itself. Not making reference in the audit plan for any special audit consideration for risk due to fraud. So you have to, while making the audit plan at that time itself, you are supposed to see based on the past performance, based on your earlier audits, based on earlier observations, based on sometime even reports, media reports. Sometimes you have to make special audit consideration for risk due to fraud. Then sometime as it has been now well established that very large number of frauds has happened due to through the related party transaction route only. So audit plan should always have a very special part addressing to this consideration for risk due to related party transaction. So it means very specifically audit plan should have first to identify the related parties, then identifying the transactions, and then ensuring that they are at arm's length. These are three aspects which should be there in audit plan in the very beginning itself. So, and the third observation which QRB has made in some of the cases, not performing risk assessment procedures to provide a basis for the identification and assessment of risk of material misstatement at the financial system level as well as at the assertion levels. So this is the next step. Then based on some audit observation, then we have to escalate that whether these whatever you have identified, whatever you have assessed are actually leading to material misstatement at assertion level or even at the financial state, at the complete financial statement level. These are the steps which has to be visible in your audit plan as well as in the in other documentation. So SA 315 talks about that. Materiality is again very important point because the entire as we know that these days the entire audit is planned based on the materiality aspect. So the QRB has found that in number of cases the firm has not documented the factors which they have considered in determining the materiality for the financial statement as a whole or for particular class or class of transactions. For example, giving you a idea. Suppose there is in a one particular audit there are certain transactions, sales transaction which has happened in cash, and most of the transactions are in, let's say, through bank or through online payment mode. So first of all, identifying that these are the transactions which are in cash, are they material? So once they are, if you find that those are material, then your audit planning will go based on that. So important is identifying the factor itself, and based on that factor, identifying the those class of transactions which are required, which are considered as material, and therefore take due care in planning and performing an audit. Not determining performance materiality for the purpose of assessing the risk of material misstatement and determining the nature, timing, the extent of further audit procedures to be performed. Because you see, sometimes this is very, very important point which they have pointed out by QRB, that for example, on a sample, you have found certain, on a materiality aspect, you found certain observations. Then you are supposed to go for further audit procedures to reassure yourself that these whether these leads to any material misstatement. So, and to eliminate that risk of material misstatement, this materiality aspect, and after the materiality aspect has been considered, any observation on that would lead to further audit procedures, and that is the point which QRB wants to highlight here, that it was not found there. So next is I'm little in hurry now because we are still on 330 only. We have to go up to 700 rather. So this
we can
is
do one thing. Anilji, we can do one thing. We can take the 4 or 5 important ones.
Okay.
Because you see, it's already only 15 minutes are left, so we have to take the questions also.
Yeah. Okay. So what we'll do now, since we can stop here also. Let's take two, three more, and then we can. Okay, let's take some important ones. These
I
are,
think that's better.
yeah. One is audit evidence. This
Yes,
is
that's right.
to my mind, is very important. And this also leads to the documentation part also. So not keeping evidence for performing audit procedures for obtaining sufficient appropriate audit evidence. So now you look at what they are saying, that they have found that whether Companies Act requirements has been, those compliances were there. So what audit procedure was performed by the firm to ensure that compliances that they didn't find there. Then testing of internal financial control, whether they have tested or not, no evidence was found. Not determining means of selecting item for testing when designing test of controls. So again, these are all audit evidences were not found on the audit file. So from that point of view, these observations are important and requires our attention to ensure that these audit evidences are there in our audit files in special. Then we can also talk about external confirmation. This is again taking a lot of importance these days. Not performing external confirmation procedures to obtain relevant and reliable audit evidence. I mean, after Satyam, you know that how this has become so important. And even law enforcing agencies are these days asking a lot of questions on this, that have you obtained external confirmations? How you have obtained that confirmation, whether the auditee itself has provided you, or have you taken independently from those parties. So because then it establishes not only the existence of that party, but also the existence of that particular transaction itself. So not keeping documentation to indicate where the external confirmation requests were circularized under the direct control of the firm. This is the SA 505 prescribes the entire process, how external confirmations will be obtained. So SQC has, the QRB has found that that process has not been properly implemented in a very large number of cases. And but yeah, coming to onto the 530. If you look at this particular standard, because as we know that we do audit based on sampling itself, but if you don't document how you say what sample method you have used, what is the population and how sample size was selected, what was the accepted level of deviation, and to that extent, deviations observed on the samples, and after evaluation of the result of sampling, have you expanded your sample size and what you have done? If that all thing has to be documented, which were not found by QRB in a very large number of cases. So from that point of view, SQC one is SA 530 is important.
I think Anilji, this is very important slide, because it helps the audit firm in containing its cost, because if the sampling is done in a proper manner, then it saves the time of the audit team also. Absolutely. If you go by default, then they will keep on doing the verifications which perhaps are not needed. So verifications, vouching, and all the reconciliations to be checked. So I think sample size and the sample should be made. Good point.
And last slide, which I would like to give here, is on SA 540. See, again, this is number of times this particular essay deals with the accounting estimates, fair value accounting estimates, and related disclosures, and how to audit all that aspects. Because as you know that in an audit, at number of places we have to do estimates, and when we make provisions, then all these estimates are projections are there. So auditor must have even if it is done by an external agency, we must see that what are the assumptions based on which these assessments of estimate has been made, how this whether this financial projection which is required to be made, and especially when we apply Ind AS at number of places, financial projections are also important. So then documenting the reasonableness of financial projections and written of representation from the management that significant assumptions used in making accounting estimates were reasonable. This is also important, though they have given, but taking a written confirmation from representation of management is also important. So these are some important observations on 540, which QRB has made. I think
I have just a point to make in it.
Sure.
That this particular essay has got direct relation with AS29, because whatever provisions we create, so that has got direct relation with the estimate. So we need to appreciate this particular essay 540, because you see provisions have to be created. So provisions are created on the scientific basis or not, that absolutely depends on the estimate and the basis of the estimate. So we need to document it on what basis the estimate has been made. So this is equally important slide as was the earlier one. So I think, Anilji, can we proceed for question answer? What's your opinion?
Yeah. I think yes. This in any case, we are going to share this presentation with the participants, so they can go through the further observations which QRB has made. Now we can take up the question answers.
Thank you so much, sir. Thank you so much, Anil Sharma, sir. Thank you so much, Anil Gupta, sir, for such a wonderful deliberation as well as the guidance provided by both of you. We have received certain questions. If you permit, can we start the question answer session, sir?
Sure.
Yes, sir. Shalini, madam, kindly proceed with the question answer session.
Thank you, Anil Gupta ji, and thank you, Anil Sharma ji, for taking the time to be with us and such a great session. Sir, my first question is, can QRB extend its scope to internal audit as well as for listed companies?
No. See, as I mentioned to you that as per NAFRA rules, area is very well defined. The area, so in fact, it goes otherwise. Sometimes NAFRA refers the matter to QRB, because what happens, let's say NAFRA is, doing a review of a particular group, and in those groups, some of the companies fall, let's say, into threshold which is not as per rule 10. So then they refer the matter to QRB to take care of that also.
Okay. Sir, my second question is, managing partner of the firm who take decision on day-to-day basis for the firm as well for the acceptance of the client, can that partner be appointed as EQCR for the specific audit carried out by the audit firm?
See, the distinction is between engagement partner and review partner. So these two have to be different. The one who has executed the audit, he is engagement partner. He's finally signing the audit report also. And the reviewer should be different one. So that's how firm is being managed, that is not relevant here. Who has executed the audit, means who is the engagement partner. The review partner should be different.
But this question will change when there is a proprietorship.
Yeah, of course.
Yes. But I think we have covered it, so I am not repeating it. Yes, Shalini ma'am, you can move it.
Sir, next question is, a firm was doing monthly GST audit appointed by Board of Director of Auditee, though it was not required by the law. Later on, that auditee appointed same firm as statutory auditor, and it is required by the law for the same year. Does it jeopardize the independence of the firm, sir?
Anilji, would you like to?
No, you go ahead.
I don't think there's any, if you look at the, maybe from code of ethics point of view, it has to be examined. But from Companies Act point of view, it doesn't have any issue at all.
I think one can be appointed.
Yeah.
Okay. So that's all from my side. Now I request Ruchi to take it further.
Thanks, Alan. And I would really like to thank Anil sirs. Actually, I'm sorry, I'm using the words plurally because I'm sure, either I have to say Sharma ji and Gupta ji so that I can clarify
Whatever.
what it is.
Most
Uh,
welcome.
So no, it was really an engaging session, and I think I really like the way you kind of did some question answers and you played the moderator role in between for both of you. So I think that was really a nice way for participants also to get engaged. So thanks for that. One question that we've got here is saying that do we have any specific content that must be included in the engagement letter, which is as per law, if there is something like that, or if there is any specified format which is available that can be used by people?
I think it's there in the essay itself. And during our deliberations, a number of places we have discussed what we need to mention in the engagement letter and what are the requirements from when that we have to take care of in the MRL. So I think these have been very well covered, and the draft and the format is already there in the essay itself.
And those are general and each audit will have some specific areas to be included in the engagement letter. That depends on case to case basis.
2-3 suggestions we made during the deliberations also, that what we need to take care of extra while preparing the engagement letter.
So essay 210 is on to the agreeing the terms of audit engagement. That gives a format also for that.
Thanks. There's another question that I have to want to understand is that when there are some points raised on an audit firm, like which are not really regulatory, like in the sense there are more like guidance, as you said at the start. So how do they behave at that point in time? Do they have to kind of communicate that to the or other firms that they're auditing for, or they kind of just go ahead and come back in terms of clarifying or working on those points?
So these are advisories which are these are purely and confidentially between QRB and the firm.
Okay.
These are not publicized, even if in this report, though they have given all the 64, but there's no specific name of those firms in that. So nowhere the specific names are given. So when advisory is given, then simultaneously QRB mentions that they are going to relook at it in your future work. So for example, if it has been done for 2021, they will say we will also review your files for now 23-24, so that whether you have taken care of that in future. So it's like a helping them to improve.
So I think I hand over to Mohit if you have questions.
Thanks a lot, Ruchi. And needless to say, it was such a wonderful session. And especially the perfect interplay between Anil Sharma sir and Anil Gupta sir. So it did not even feel like we had two speakers in the room. So they both were so perfect.
Thank you. Thanks to all of you. And we also enjoyed it. And we are really thankful to WASB and also to Anil D. Lalji for providing all the logistics. It was a very interesting experience. I must admit that even we learned a lot during our deliberation itself. So it's good.
Believe me, sir, the pleasure was all ours. So much we got to learn about such a topic.
It's very important topic. And I have a suggestion to make that this particular presentation that has been prepared and that we will be sharing, a training session be held in that firm itself also, where there is no need to make the presentation, but discussions can be held on the important or the specific essays which are applicable to the audit firm itself, because some essays are very important and common which applies to each and every firm, like audit evidence, audit documentation, then written representations, then external confirmations. So audit engagement letter. So I think this can be done. And I have a suggestion that with respect to SQC1, this should be done in these months, because generally pre-March we are a little bit free, the audit firms are. they are not having that much pressure and engagements, then these type of policies can be drafted during this period, and this can help to carry the audit very effectively when the audit period will come.
Yes. Absolutely, sir.
Mohitji, any
Absolutely
question
agree
from
with
your
you.
side?
Yes, sir. So we do have received few questions from the participants. So the first question is, will audit firms subject to peer review also come under QRB?
Yes, yes. They
And
can come. Yeah, there is no bar that if it is under peer review, then it cannot go to QRB.
and so whether they will also come under the NFRA?
No, that distinction we have already made, na, that it won't come. But
It's there in the slide itself.
yeah, but NAFRA is doing, nobody else can touch. Rest can be done by QRB.
The next query we have, how do we maintain audit document for the lower level company?
In
Lower level
level company.
you see, again, if you look at SQC1, I'll once again come back to that. You see, each SQC is not only addressing to a bigger firm where there is a large number of them. It is also addressing to let's say, even a small firm where even proprietor, I would say even 2-3 partners. See, you have to create quality control consciousness within the your audit team. There may be one leader and or maybe 2 partners, 3 partners. But if you have a systems in place, you have policies and procedures in place, you know how to address. I mean, look at that point which Anilji raised again and again about the outside consultancy. So the SQC provides you ways and means. For example, there is again another talk about when we talk about human resource, how you are going to train them. See, encouraging your staff to attend all these technical courses, technical discourses will help them to improve their quality. So all these are mentioned in there. So you have to develop within your firm itself. So their small and big is not important. Of course, if you are small, you would be making smaller efforts, but with high hope that yes, it will give you more. Because if you are small, then you would always like to have more areas to cover because you have to do yourself.
Okay. So from this question, I also have another question. So like we also had a fair bit of discussion on how important it is for small firms and the difficulties they face in implementing all these controls. So one of the specific challenge area they face is training of staff, because staff training is always a very crucial area. And being a new chartered accountant who starts his own CA firm, training becomes very difficult. So any advice you have for those chartered accountants, that how should they train their staff in these quality standards?
Anilji, can I answer it?
Please, sir.
No, it's not a question, it's a suggestion. And it's rather a wish, which I absolutely agree with you. Because I am going back to my earlier years. So we used to fix a particular time in a week at any cost. That 2 hours we will be spending. Then what we started giving work to our articles to prepare presentations on essays and AS. So having the knowledge of essay and AS is very important if you want to carry the audit in an effective and efficient manner. It helps a lot. Our firm is also a very small firm. At least my firm is not a very big firm, right? But you rightly raised this issue, and it will help you also, and the confidence that the staff gains once they make the presentation. Maybe they are not up to your mark, but the presentation they make. So training sessions, I think, are must, and the resource material that we are having on online various platforms that can be used or can be prepared in-house also. So I think training sessions must be held. Anilji, you have to add anything?
Yeah, I think that's a very good point which you have made. And then this team only carries you. And then you see another point which I would say, Anilji, you remember that in initial years, we even more than 5-6 firms came together. And then that also makes, see, then you are as good as you are a big firm family. So where, see, let's say 5-6 person from each firm, then it makes a group of, let's say, 30-40. So, and then this helps to each one of the member there.
So, Anil sir, can we will be able to see a day when a firm is only engaged in training and review services than dealing with the clients and auditees?
Absolutely no problem at all.
Right. Good
No
point.
problem.
Thank you so much, sir. So I think with this, I would hand over to Manish ji for asking the further questions.
Sir, I just have one thing in mind since it has been a very detailed discussion. So the QRB has published this review. So what is the basis how they choose the auditee firm to be audited, or what are the parameters they have chosen either on a client basis or a private limited firm, or how their auditors are being reviewed? What is the basis for choosing those firms?
See, if you look at the report, they have given the basis, how they have selected it. Of course, first of all, they wanted to audit only private limited companies.
Yeah.
Then they ensured that, the firms which they have selected are representing a very large variety of industry.
Okay.
Then third thing which they did is that they ensured that the audit firms which have audited these 64 companies, they also have a very good mix of small, very small, and big firms. So where more than 20 partners, then with between 10 and 20, and then very large number of less than 10, 31. 57 auditors audits were involved, audit firms were involved. Out of them, 31 was those firms where less than 30, less than 10 members, partners are there. So that way they try to give a very, very clear picture that how the smaller firms are performing audit of a reasonable size private limited companies. So that's, I would say, the crux of what you are trying to ask.
Sir, in that case, could that be the reason why more discrepancies are found in less than 10 partners, because sample size was containing more of the firms having less than 10 partners?
Yeah, that you see the point which Anilji mentioned, and in fact one of the moderator also raised, is that in sometime in smaller firms, essay itself does not make a distinction that if you are small, how you are going to do it, or if you are large, how you are going to do it. So sometime in smaller firms, and looking into the timing of audits, so all the audit has to be done in a very tight time schedule. And if you have a smaller team, so sometimes you miss on those. So that's the point is well taken. But one point which I mentioned is that when you look at the standard on documentation, it gives you a scope that once audit is complete, that you can rearrange, manage your file, and put it into a proper fashion. So that's a very important point. Of course, at that stage, you are not going to change your opinion on that. But at least documentation part, whatever is missing, what you have actually done to record that is important. And now, luckily, for a smaller firms, let's say from November to January, February, March, there's hardly any work on audit part. Very small work, I would say. So this is a very good time that you ensure that your files are taken care of, they are properly. So that exercise and this exercise is very important from 2 points of view. One, it takes care of of that particular audit file. as well as it gives you an indication, it gives you a hint that what are those steps which you missed and should be added into your next year's audit program. So always take that as a positive input. So I think that's a point which you wanted to ask.
Sir,
Anilji, from what you just mentioned, a cue has come in my mind that AASB should organize a webinar on the implementation of essays and the small forms. So I am making request to Anil D. Lalji to convey to Chairman, sir.
Sure, sir.
We appreciate the view of the House
Yes.
that smaller firms face this issue and can be easily resolved also. So discussions can be held on it.
Sure.
sir, another question. Can an auditee or the audit under review can be reviewed by both NAFRA and this QRB at the same time, maybe for different auditees?
No. Once it is gone to NAFRA, then QRB has to leave it.
For private
Whatever
limited
is.
also, they have to leave it, sir?
Yeah,
Okay.
that's very clear.
Okay.
Because
Sir,
NAFRA has got a different perspective. Sometimes the QRB has a very defined role from as I mentioned to you about because this has been formed under the Chartered Accountant Act, and it is primarily to help. Of course, it also sometime if they found major default, then they refer to disciplinary directorate also for further examination. Again, it is only for further examination. It's not, but whereas in NAFRA, they are straight away, they can take a final call to debar, to see whatever you have seen some of the reports which has come. So it's totally different approach. So therefore, whatever has been taken up by NAFRA, which is the domain, so it's then nobody else touches that, and they have to actually leave it, except the law enforcing agencies. Of course, they can continue with like CBI, and they can continue with it.
sir, as you mentioned in your earlier slides that the CAG will deduct some marks if some advisory is issued to the members.
Yes.
So, will it imply that the review reports or QRB reports will be in a public domain with name of the firms, or they will be specifically informing the CAG for those firms?
Yes. They will be specifically informing. This information is not going to be public.
Okay. And so, last question, Malab, what are the observations of enforcement agencies for the on audit procedures of the firm?
So, in fact, we don't have any compilation of the same nature by any law enforcing agencies, but it's a very good idea. We can compile some of. See, now what they do. See, look at how it is done. Like, for example, a case is referred to NCLT. Then NCLT goes for forensic audit. Then based on forensic audit, banks refer the matter to CBI, and then CBI carry forward that. And if they found certain, let's say, issues with regard to PMLA or some other FEMA related, then they bring in ED also. So this is the way how this entire I would call it jal of law enforcing agencies come into play. And each one takes care of the report of other. For example, if you look at from that point of view, even SFIO, Serious Fraud Investigation Office, that is primarily coming out of the Companies Act. Any matter referred to them, they give a report, they refer the matter to ED for further observation, to disciplinary directorate for further action. But and if you really look at some of the questions which they raise, that is purely, I would say, very heavily relying on the documentation part. And they also raising few very difficult questions, sometime because of their maybe ignorance or something, that the role of management and role of auditor. So sometimes they mix it. They say they feel that all the books of accounts and are also with the, you see, with the audit firm only. So there they have to be, see, explained through your documentation that you started your activity only after you have received final, you see, let's say drafts, financial statement from the company. So if you can prove that, then they are satisfied. But otherwise, they will feel as if you are part of preparation of accounts also. And in some cases, it is there. So that's why they do that way. But and then documentation is definitely the most important element when you are facing any law enforcing agency. It's only the document which will help you to put your case, whether how you have dealt with, are you involved, not involved, all those things.
Means to say, sir, that discipline in doing the audit will save not only time but from all kind of questioning by the
Absolutely, yeah.
Right, sir, and it has been wonderful. I think we have done with the questions raised by the members, and since it has been a wonderful celebration, and now I request my co-coordinator Shalini ji to officially thank and present the vote of thanks. Shalini ji, to you.
Yeah. Thank you, sir. We are really grateful for your time and effort in speaking at this event. Sir, it was really a wonderful and insight session, and it has enhanced our knowledge related to QRB. So we are hopeful that we'll have more and more session with you in future. So now I would request Anil ji for the final vote of thanks.
Thank you so much, ma'am. First of all, on behalf of AASP of ICI, I extend my heartiest thanks towards C. Anil Sharma ji and C. Anil Gupta ji for their wonderful quarterly joint deliberation, and they have covered all the aspects of the discussion on QRB findings, and we have gained a lot through this deliberation, sir. And on behalf of AASP, once again, thank you so much from the core of my heart for your sincere availability. Whenever I called you, sir, always you give your precious time, sir. Anil sir, as well as both the Anil sir, always they give their precious time and never say no, Anil sir, मैं available नहीं हूँ. So thank you so much, Anil sir. Thank you so much, Anil sir, for
Thank
your
you.
precious time as well as the wonderful deliberation. And
नहीं,
I also
हम तो मौका ढूंढते रहते हैं, आप हमें बुलाएं. बहुत धन्यवाद आपका.
Sir. नहीं,
Thank
sir. In spite of having very busy schedule और so many other engagements, even अगर call नहीं भी pick होता, आपका call back वापस आता है और always appreciate, sir, and always you give this time for the profession.
It's
Thank
our
you
honor.
so much, sir.
It's our
Thank
honor.
you, sir.
Thank you.
Yes, sir. Thank you so much, sir. Thank you. I
Thanks,
also extend
sir.
my heartiest thanks towards the all four moderators, Shri Manish Bansal ji, Madam Shalini Gupta ji, Madam Ruchi Maheshwari ji, Shri Mohit Bansal ji, for their wonderful coordination for this webinar as well as moderating this webinar. They have also spared their precious time, complete more than 2 hours for this webinar. So thank you so much from behalf of AASP of ICI. Thank you so much. And I also thanks all the participants of today's webinar. Thank you.
Thanks to all. Thank you.
Thank you.